All right, welcome to the daily market recap for Monday, November 10th. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off, huge day on the indexes and growth stocks wise. We had that big shakeout of the 50-day moving average and the support gap on Friday. It was down about 2.2% at one point on Friday. Ended the day just under flat. And then over the weekend, speculation that the government shutdown would be ending. Nice big gap up, back through the 5, the 10, the 20-day moving average. Almost closed out this entire secondary resistance gap and closed near the high of the day, up 2.2%. Exactly the type of action that you could have hoped for. Nothing better there. Now we really just need to see volatility contract. We had the overreaction to the downside. Now we're getting a little bit of a snapback to those moving averages. But the easiest trading really occurs when the indexes are trending above the rising 20-day EMA and doing so with smaller daily ranges. So look back, once we got over the 200-day back in May, it was basically the easiest market to trade up until October 10th, where we saw volatility pick up. And since that point, we've had pretty elevated volume. So if you're very, very bullish, you're probably right one day, wrong the next day. If you're very, very bearish, you're probably right one day, wrong the next day. And with this kind of volatility, the goal is to use progressive exposure, slowly ease in to the market, or if you're on the short side, slowly ease into your shorts and really let the market tell you which direction to continue to add exposure to. After the last 2 days, like the worst thing that you can do is get very, very bearish right as we come into a key moving average, or very, very bullish after 2.5 days of rallying right into either like a key gap zone or a previous high. So stay level headed, let the volatility contract on the indexes. There should be some great opportunities when that volatility does start to contract. S&P 500 up 1.5% today. Very similar action off the 50-day moving average, gap through the 5, the 10, the 20, and closed into that resistance gap. IWO, the growth stocks of the Russell 2000, gapped up back through that 50-day moving average. Little rejection at the 10 and the 20-day. Let's just kind of pull back into the 50, build a higher low, and then we could pop through those moving averages with a little bit more power. ARKK, another kind of risk on, risk off parameter that I use, still under the 20-day moving average, actually closed under all the key moving averages today, even though it was up 2.6%. Let's at least get into the 10, the 50 in this gap zone, and then start to build some higher lows before we get too bullish. Then switching over so we can take a look at Bitcoin. From this consolidation over the weekend under the 5-day moving average, we did break to the upside, which is positive price action. We reclaimed the 5-day moving average on Sunday, pushed through the 10-day today, sitting right around that 105.8K mark. And this could be like the low of the pullback. Only hindsight or only time will tell. We'll know in hindsight. What I would be looking for still with the indexes is a higher low to be built. So let it rally, then let it pull back, build a higher low, and we'll have a pivot to work with. Guessing the direction of the trend from that point, I really don't see a lot of alpha in that. Ethereum had the same kind of flag right into the 200-day moving average, breaking to the upside, which is positive. Now let's build the higher low and then start trending higher. Getting into the liquid leaders, really, really strong price action. All 9 of them were green today. SNDK, another 12% up move, opened on the low after a big gap up, closed at the high of the day on another very large volume day. Going parabolic at this point. Never came into the 20-day EMA this entire run. And now you're seeing volume pour in as the trend goes vertical here, which is very good if you're already in the trade. If you're trying to get situated, there's just no really way to enter this unless you're day trading it higher, which would be a great opportunity if you were a day trader. LITE up 8.3%, closing in the bottom half of the daily range, but still monster gap up after the test of the HVC and the support gap on Friday. Really nice action here. WDC up another 6.9%, gap up over that 5-day moving average and closed well. MU up 6.4%, new all-time highs. NVIDIA gap up back through the 20-day EMA after Friday. We tested under the 50-day, got into a secondary support gap, kind of the same spot that we bounced October 22nd. Snap back through all the moving averages today. This is just wild volatility for a market cap stock like this to have. So again, it's that volatility contraction that we're really looking forward to before placing some larger bets. Unless you're a day trader or very short-term swing trader, then this is the market that you have to be taking advantage of because you look for volatility like this. STK up another 5.2%, new all-time highs. Google up 4.1%, closing at a new all-time highs, even though it didn't take out the highs from their earnings, but closing basis, new all-time highs. BE up 3%, another uppercut and failure of that resistance gap, but a close over the 5-day moving average on lower volume. While we consolidate, I wouldn't consider that bearish, especially with the indexes getting back over those moving averages. And then First Solar up 1.8%, gap up back through that 5-day EMA and that HVC level. Close kind of middle of the range, but man, solar stocks have been on fire. They probably deserve a couple more names on this list. CSIQ has been up over 100% from 14 up to $34. Just enormous volume coming in here. And then SEDG, let me get that chart up here. SEDG gap down, oops reversal on earnings, ending up the day 29%. 2-day pullback into the 20-day EMA, resolves higher again today, up 13.5%. So as we switch to the ETFs, the themes, you'll see solar stocks, TAN continues to be a leading theme in this market and really getting massive amounts of volume accumulation here. And one thing that I noticed over the weekend, I talked with a couple traders about, it seems like some of these solar stocks are now being re-rated as like energy storage instead of just solar stocks. Kind of like we saw the crypto mining stocks get re-rated. Instead of tracking Bitcoin's price action, it tracked how data center stocks were acting. So when a leading theme like that starts to get re-rated, that's when you can have some very, very quick moves up like we've seen. Speaking of quick moves up, MSOS, the cannabis ETF, monster accumulation over the last 2 days. We had an undercut and reclaim of Thursday's low on Friday. After we started to hear a little rumbling about that government shutdown ending, that was up 7.4%. Today, huge move up 11.9%, back into the 50-day moving average. And the whole idea behind that is you can't reclassify cannabis as a different level without the government being open. So if the government's open, maybe this is something that can be reclassified. And if it does, it sure has a much higher move to go. Speaking of kind of government reopening plays, if the government's open, they can print more money. And with that, gold and gold mining stocks really saw some nice relative strength today, up 4.7% for the gold miners. We kind of put in this double bottom, consolidated, and then popped through the moving averages today. Again, up 4.7%. Semiconductors, we saw NVIDIA's chart. This awesome back through the 25, the 10, the 5, closing above all those moving averages, up 3.1%. KWEB, the Chinese internet ETF, I still have hope that this is going to be a theme that emerges. Looks like it's going to be the 2026 theme instead of the end of 2025, but 3.5 year base breakout, pulled back to that breakout retest area, and now starting to build some higher lows, which is solid. With all this volatility, I'd still be focusing on whatever names within that theme hold up the best. I wouldn't be trying to like pick the low in any name that pulls back, just in case the theme does roll over. But there's a couple Chinese equities that are going to be on the long watch list that we'll cover. Cybersecurity, another theme that the individual leaders of the theme look way, way better than the ETF. And the ETF itself, big gap up, recapture the 5, the 10, the 20, and the 50-day moving averages today, up 1.75%. The ETF can pull back and start to build some higher lows while the leaders really tighten up right at their highs. Definitely a theme to keep your eye on. A couple other to cover, XLY, or no, sorry, not XLY, XLV, where is it? XLV, higher highs, higher lows. Eli Lilly, new all-time highs, which is a major component of this. That healthcare theme is one that I continue to believe is an emerging theme in the market. Speaking of which, biotechs up another 1% today, closing back through those moving averages. This was a stock that a theme that I put on Friday after we recaptured the low from November 5th. Just bought LABU on that. So far, working well. A pullback into the 20-day as a higher low could be another ad spot for that in case you missed Friday's action. First time testing the 20-day EMA after making new 52-week highs is usually a good risk reward spot. So we'll keep that area in mind. And then XLF, the financial ETF, we heard news that we're stretching mortgages from 30 years to 50 years, which is great for banks. We heard the auto loans are going up to 15 years now, which is, again, great for any lenders. So no surprise that XLF up 0.3%, eating into that resistance gap just under the 50-day moving average. Had some good relative strength all of last week. And then the weakest theme this or today, ITB home builders basically flat on the day, still under the 200-day moving average. Doesn't seem like the stretched out home loans is really helping that group. And then XLP, the consumer staples, just another down 0.4%, closed under the 10-day EMA, and still is in stage 4 decline. Uh, Before we get into the long and the short setups, we're still right in the middle of earnings season. Today after the close, we had Rigetti, CoreWeave, BBAI, Rocket Lab, ASTS. We'll go over those results in a second here. And then Tuesday before the market opened, NBIS, that's something that I'll be watching pretty closely. Um, SE has kind of fallen off a little bit of my radar. Tuesday after the close, we have Oklo. That's about it. And then kind of second half of the week is a little bit more important for me. Taking a look at some of the earnings results after the close. Where do I have that? Price percent change, post market. Here we go. So the real up 13.3%, BBAI up 12%, Rocket Lab up 6.3%, which is right back at this 50-day moving average. Nice bounce at a support gap on Friday, both of those areas. That's a stock that I'll be watching for tomorrow, but really like I want to let these things like rally, pull back, form some higher lows, and then build out after that contraction. I don't really want to chase anything here. Rigetti down slightly, down 0.4% after earnings. ASTS, same thing, down 0.5%. Occidental down about 1%. Plug down 2.7. MVST 3.3. CoreWeave continues to be pretty weak. You can see this is not a chart that I've been watching lately, down another 5.8%. And then TDW down 7.7%. Getting into the long and the short setups, we'll go most liquid to least liquid on both of those, starting with Alibaba. This is probably the most liquid name in China and continues very similar to the KWEB ETF, building some higher lows right on that 50-day moving average. Nice and tight price action over the last 5 or so days. And you could take this just on strength, like through the 20-day EMA, through that 170-ish area on strength. Otherwise, a quick pullback into the lows here at 164-ish, then you can manage your risk against the low of Friday and keep your risk very, very tight. You're more likely to be wrong then because if you're buying as we pull back to a key area, there's a chance that we get a little shakeout or this trend ends up like rolling over. But at that spot, you could size up a little bit more aggressively, keep your stop a little bit tighter, and keep that same portfolio level risk. If you're buying on strength, then your probability of being in a winner goes up, but your stop loss, probably at today's low, is a little bit wider in that case, and then you have to size down to keep that same risk. CrowdStrike, the strongest cybersecurity stock in my mind. Pull back to the 10-day EMA and the gap zone low at 539, like 75 area would be viable. If the market goes through like a larger pullback over like 2 or so days, a pretty sharp one, the 20-day EMA and support gap that we found buying support at before, but at a higher low spot at that 530, that would be a really, really nice entry. Kind of doubt that we're going to get that. So I've got my alerts at the 10-day EMA and right around 540. CLS, awesome test of the 20-day EMA on Friday, bounced right from there, closed well, followed by a gap up. Now just a higher low build out into Friday's close at 322 would be the buy spot. Then I can manage my risk against the 20-day EMA and keep everything nice and tight. PDD, another Chinese equity. And this has been kind of building out a massive base for multiple years, very similar to the other Chinese equities, but recently has been showing a lot more relative strength than the other names. Rising 50-day moving average test on that first pullback, October 10th, when the trade war started, and actually took out the previous, like the highs of this year. No other Chinese equity did that, so that's kind of a positive, except for XPEV, and that chart's been all over the place. Built a couple higher lows on the 20-day moving average, now tightening up. Just through today's high would be buyable. Stop at the 20-day EMA. It's not a very fast mover, so that's not a ton of risk. Datadog, awesome move on earnings of 23%. Um, Followed through to the upside a little bit after a gap down on Friday, and then today, gap up and strong close. A retest of that high volume close from earnings right around 191 would be buyable, and then stop at the 5-day EMA on that one. For solar, on the leaders list, pull back into that high volume close, even maybe a little bit deeper, so I can get my risk just below the 10-day EMA. That would be ideal. Again, a lot of these solar names are really starting to act well. This one's consolidating right after that earnings gap up, where it was up 14%. So that is a spot that I'll be watching for. CSIQ, whenever that does pull back and put in a flag, will be like my main focus. But in the meantime, getting some solar exposure in First Solar, right around that HVC or the 10-day EMA, those are the two spots that I'd be watching. SATS, huge gap up earlier in the year, up 70%, and then basically flagged out for a couple months until this most recent earnings. We had an awesome oops reversal on Friday, finishing the day up 4%. And then just a dead volume day today, very tight price action, closed the day up 0.3%. This is one of the few times that I would actually be okay buying on strength into a resistance gap like this because you had an oops reversal. So anyone who should have been shaken out was shaken out on this move. And then instead of expanding higher, we had just a dead volume, really tight day. So I can manage my risk nice and tight on this through today's high, stop at today's low. Kind of similar to the Oklo trade I had earlier this year. We'll go back where we had this big shakeout. Yeah, daily chart here. Um, no, not OKLO, my bad. OKLO. Here we go. So big shakeout on September 5th, dead volume day, September 8th, and then just through that high was the buy point. And from there, we got a nice linear move, one of the better trades this year. So that big shakeout followed by a dead volume day is one of my like favorite setups. I wish there wasn't an overhead gap. That does kind of take away from it being my favorite. I still probably won't size up because trading on the long side, I'm in a little bit of a losing streak. So size down until I can actually get that um, feedback from the market that I'm seeing the ball well again. But through today's high, stop at today's low is the trade. GMED, this is another healthcare related stock. Again, that's a theme that I think is kind of emerging in the back half of this year, hopefully the first part of next year as well, as kind of a beneficiary of AI. This was up 36% on earnings, massive, massive volume. Follow through today. That would have been viable like through the HVC after the gap down. Just a retest of that level, 83.90, and then stop at yesterday's or today's low would be the trade here. PL, this is going to be one of my main focuses tomorrow. This is in the space area. So ASTS, Rocket Lab, those both reported. Rocket Lab's up, ASTS basically flat after hours. This is a name that had its highest volume ever on earnings back in September 8th. Did a secondary offering that got soaked up with every single close over the 5-day moving average. When that happens, it's a stock that you need to keep focused on. Nice tight day on dead volume, September 16th. Then from there, about a 75% move up, started its first pullback, got into the 50-day moving average on Friday. This was such a beautiful entry, and I did not take it. I'm kicking myself. 50-day moving average, support gap, oops reversal, gap down. That was such a layup of a trade, and I missed that. Today, followed through to the upside of 4.5%. A couple different ways to play this. I love that we squatted here and that we have this little gap because with a squat like this, some people will be less willing to take it if we do get a gap up. That should not be the case. I've noticed this multiple times. If you get a squat, like, but you still close above the key moving averages, still positive, and after a key level test, a squat followed by a gap up opening range break is a really, really good way to ignite the uptrend. So uh, either a gap up opening range break to the upside or morning weakness that comes back into the moving averages into the gap zone at 1280. That either way is buyable. And then if I'm buying on strength, then the stop would be the low of today. If I'm buying on weakness, then the stop would be the 50-day moving average and the support gap low. And finally, lending club. If we're doing 50-year mortgages and we're doing 15-year car loans, probably good for the lenders there. You got this big, actually, if we zoom out even more, multi-year base that we just started to break out of. Pull back into the 20-day moving average on Friday. Great close on Friday, followed by a gap up. Just a retest of Friday's close at 1815 would be buyable if the market just pulls back for like one day. Multiple day pullback, that's support gap in the 20-day moving average, which would catch up, would be a very, very good spot to manage risk against. Then on the short side, a couple of these I deleted, so we'll just cover those 10. My bad. First off, iron. We saw a lot of the data center plays actually be weak today. And looking at some of the charts, we kind of built some higher lows, took out the previous highs, but then immediately rolled back over. Had some weakness on Thursday, some weakness on Friday, and then today uppercut and failed at that resistance gap and then closed back under the 20-day EMA after earnings. Kind of feels that like this has at least a test of the 50-day, if not more, to build out a secondary base here. Still, I don't want to take it on weakness into a support gap if I'm shorting. I want to wait for another rally back into like that 10-day moving average or the resistance gap. So then I can manage my risk with the stop over today's high. And then that's a nice tight stop. If you're wrong very small. If you're right, you're right multiples of your risk. And that's what trading is all about. Do I have another one? Yeah, CIFR, same group, same kind of weakness. First gap down after earnings. We saw this with the quantum names. After a very, very big move up, your first unfilled gap down, usually a sign that the trend might be changing, especially if you don't go back and fill it like immediately. And we didn't. We actually gapped down again on Friday and then confirmed that as a resistance gap as we gapped up. Sellers still present in that area. So we marked that as a resistance gap now. Closed at the low of the day on the 20-day moving average. Same kind of thing. Little rally back up into that resistance gap and then a stop over today's high. You could even put it over the high volume close from earnings and manage your risk from there. Costco, perfect example of stage analysis by Stan Weinstein. You've got your stage two uptrend, your stage three top, multiple failures at the 200-day moving average, then multiple failures at the 50-day, 50-day, 50-day. Thursday or Friday, we uppercut and failed at that resistance gap, right at that 50-day moving average. Followed through with the gap down and weakness today. If this was red today, well, the S&P 500, the Nasdaq, everything was up today, but Costco was down. That's a sign that this is ready to just roll over into its stage four decline. We still have a lot of buying pressure between this like 902 and 915 area with all these lower wicks. So still, I don't want to short into weakness because we've seen there's evidence of buying pressure at the spot. A little rally back into the 5-day moving average in the gap zone would be another short spot. If it even goes higher and gets up to the resistance gap, that 50-day moving average spot would be A plus. Kind of don't think that we'll get that given the relative weakness compared to the market today, but if it does, even better. QBTS has earnings out of the way with the quantum theme. Rigetti down slightly after hours. Today, uppercut and failed at that resistance gap at the 10-day moving average. Just another retest of that area would be the short. And then I would keep my stop over the 20-day on this trade. I don't want to short this into weakness, into the 50-day moving average, into a support gap that we already bounced at. There's obviously evidence of buying pressure here. So you don't want to start your short. You never want to start your trade right against an area where there's like sellers if you're going long, buyers if you're going short. You want to skew that risk reward in your favor, even if it does tamper the win rate on the trade a little bit. So instead of shorting into weakness into like a support area, a little rally into the resistance gap, into the 10-day moving average, that would be the short spot, and then keep your stop over the 20-day EMA. We'll keep SNDK for last. BMNR tracks Ethereum. We've already covered that Ethereum kind of flagged out, started to rally higher, but there's just so many people trapped in this name from like 140 and then this resistance gap at 65. Then this is why we draw resistance gaps. Like you saw multiple times, this came up, failed, came up, failed, came up, failed. Like if you're buying this on strength at the resistance gap that has multiple failures at, I can't really help you. We don't want to be buying where there's evidence of sellers. We want to be buying on shakeouts if that's the case. And just like we don't want to buy extended names, this is extended down quite a bit. Even with today's test of the 200-day moving average, not really the spot that I'm super interested in getting short. I want to give it time to snap back into the 20-day EMA and this gap zone at 46.50 before I start shorting it. So I kind of doubt that happens tomorrow, but this, along with like MSTR, whoops, along with MSTR, needs a little bit more railing back into their 20-day EMAs and their resistance gaps before I want to start shorting again. HIMS, same idea. Big on a larger time frame, this looks kind of like a broken chart. We had higher lows, and then now we're putting in lower lows. We're at the same spot that we bounced the last couple months. So again, we don't want to short into that spot, even though today we had some relative weakness. Let it rally back up at least to the 10-day and then into these congestion zones at the 10-day moving average, right around $44. That way you can manage your risk at the 200-day moving average. That's about 6%, a little bit wide. So the more we rally, the better the short becomes. But this is a name that after a big base like this, and it really looks like we're breaking to the downside, any snapbacks and then weakness is going to be something that I look to short. Speaking of which, Carvana came into the 200-day moving average. Again, we don't want to short into a key level after a move already to the downside. Oops reversal on Friday, reclaimed the 200-day, gapped up today. Again, if we're extending car loans, this probably does get a little bit of a bounce. But look at the volume on the bounce. Very, very low. Still don't want to take this on weakness, want to take this on strength. So an uppercut of this resistance gap and the 20-day EMA. Even the high here on November 3rd, you want to be really patient on these setups because the market itself still over the key moving averages. So let it go through 335 and then lose the daily view app as it comes back down to confirm there's weakness coming back into the name after the pop. And then you can manage your risk with whatever of the stop at the high of the day is. SMR, lots of weakness here, was one of those nuclear names that really like never got going like Oklo, like LEU. Under the 200-day moving average already. Let it bounce back up at least into the 5-day, into the resistance gap at $32. The higher the better though. Get it at $36, the 10-day moving average. Then you can manage your risk above the 20-day and this gap zone. CORZ, another name that started to rally, unfilled gap down, lost the 5 and the 10-day. Closed under the 20-day today. Let it rally back up into this resistance gap at $20. Uppercut and fail that would be the entry. Stop would be today's high. And then last but not least, actually the one that I'll probably be focused on the most is SNDK. We talked about this on the leaders list. Huge volume coming in as everyone is just going along this name. After a 400 something percent move, we don't have to guess. I can just measure that really quick. 500%, my bad. After a 500% move, people are capitulating and going long at this point. In a perfect world, we would basically copy paste today's candle, like another gap up, another big push, get it over $300, and then we would get one more gap up on Wednesday. That would be an exhaustion gap, like a quick green to red move as the potential short. I don't know if we'll get that, but do have alerts right around this $300 level. If we can gap up, uppercut, and fail 300, that would be the potential short spot for me. And then very, very key with these parabolic tops, you have to stay on the right side of the daily view app. So not the anchor view app, but the daily view app, because these moves are going parabolic. They've shown they can go up 500%. It can go up another 100% from here. It can get absolutely crazy. Take a look at SMCI back in February of 2024, MSTR November of 2024, UAMY just recently was one of my better trades this year. Not U UAMY, excuse me. Multiple unfilled gap ups, volume peaking each day, and then a gap up over a key level over the $20 range pre-market. And one thing that I've noticed with these parabolic tops is you tend to peak in pre-market and you don't take out that pre-market peak during market hours. So if we get a gap up on SNDK and then we start to act weak and I get in, but it starts to rally and takes out that pre-market high, I am not sticking around on the short side. This can continue to rip people's faces off until everyone capitulates along. If it's going to be a reversal and a major reversal of the downside, all the good price action will happen under the daily view app. So stay patient. If you're in the trade and it's really working, staying heavy under the daily view app. But do not fight this monster trend if we take out the daily view app and that pre-market high. I know a lot of people get killed trying to short these parabolic tops. If that's not for you, that's not for you. Don't take the trade. That's fine. This is one of the setups that I really like to trade. I've done a ton of studying of these setups. So it's something that I'll be focused on. But if that's not the setup for you, perfectly fine. There's so many setups that we covered in today's video. Hope you guys enjoyed it. That's the daily recap for Monday, November 10th. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.